Good afternoon, everyone. In today's video, I'd like to break down and focus in on the Homebuilders ETF, mostly because we saw a good deal of volatility enter that marketplace today. Now, if you've been in the market for a new house or if you've been reading the news about new home prices along with the shortages of key ingredients for new homes, let's call it, things like lumber, then you have an idea that Homebuilders ETF, for the most part, has been on a recent tear as a result of all of these global shortages. Now, today particularly, we had yet another catalyst event for volatility, and that was around permits and housing starts reports. Now, let's start first with permits. And the permits report here is really around the number of new permits issued for the previous month. So this right here is looking at April, and this is true for housing starts as well. The number in terms of estimated or forecasted number was 1.77, and the actual number of permits issued, 1.76 million. So here in terms of actual versus estimated, more or less the same, no real difference. The market expected that. Now, the second number that we have here is around housing starts, and that's where things got a little interesting. Inside of our housing starts, we expected to see 1.71 million, and housing starts represents new construction, places where we're breaking ground, places where we're actually starting to build new homes. Instead of 1.71 million, the actual number we got, 1.57 million. And this delta right here, in my opinion, was what led to the volatility that we saw really inside of XHB and the major ETFs. This volatility came in two different parts. So let's start first with XHB here, and I'll break down the volatility on the charts just using price action. The first sell-off on the backs of this news came in the morning. After that period, you had really a good deal of chopping around sideways before the second sell-off came into the marketplace. So if we break this down, first and second. Now, in both of these scenarios, our lower volatility box ranges are plotting exactly where you see them. So in this first round of sell-off, we're really waiting for a level closer to down here to get interested. That level does not come in XHB. The places where that level does come, however, are some of XHB's top holdings. So let's come into the Analyze tab here, and here you can see a list of the top 20 holdings. I'll focus in on a few throughout this video. Let's start off first with Masco, that's number 13. So if I come into Masco, keep in mind the volatility you saw in the morning here in XHB, the ETF by 7:30, we haven't really breached our aggressive volatility box. If I come into Masco, much different here. In Masco, with the morning news, we had a nice consistent sell-off, came right into our aggressive volatility box well before 7:30 a.m. And this is that same move that we were seeing in XHB, which didn't even breach our aggressive box. So that's the difference between the larger ETF along with focusing in on the volatility of specific top holdings. Now comes in the actual setup. We had a breach, we had an edge signal, which is our oversold confirmation, and we hit our first target. This is T1, the gray dashed line. Same thing with our conservative models as well. We're looking for that same move, and then we move our stop to break even, looking to see how high is high, in this case where we were looking to buy. Now, we hit T1 here, but that was pretty much it, right? So with XHB, for example, we saw that wave really came in pause. Here in Masco, same thing as well. The second sell-off came into the afternoon hours, where we then breached our conservative models. Again, we saw the oversold signal, and we hit the target. So in Masco, for example, you had the aggressive models give you your first target, you had your conservative models give you your first target, and both scenarios gave you two different volatility box breaches, two different volatility regimes, and two different volatility breaches altogether in the overall larger home builder market as well. If we contrast this with XHB here, XHB looks a little bit different. XHB, the only place where we actually breached our aggressive zone was in that second wave where we breached towards the close and then we bounced from there hitting our first target. So that was XHB. So far, Masco, we found two different entries by breaking apart the ETF. XHB, we had only the one entry. Now let's break down a reverse scenario in which we saw a lot of volatility that came through. We broke outside of both the aggressive and the conservative, but in a more consistent manner. So we have JCI here. Now, if you remember Masco, we came straight down before 7:30. JCI, we had that sell-off, but not quite enough. We finally breached our aggressive box closer to that 9:30 zone. Now 9:30 is where we're looking at JCI to try and hit its T1. That's this gray dash line. That does not happen. Instead, we see sellers continue to keep bringing price action down lower. So now comes in our conservative models. We breach our conservative models as well. We're looking for that gray target line, T1. We get fairly close, but we fall just a little bit short before that final reversal into the close where we had continued selling really to bring us into the final close of the market. So hopefully this gives you an idea of 3 different markets, all really related to the same idea. XHB was the overall ETF market that we were looking at. Here we had one winner, and that was pretty much it. Then inside of XHB, we had 2 different stocks, top holdings that we focused on in this video. There were many more that triggered. The first was Masco, that was MAS, and in Masco, we had 2 different winners as well. The second was JCI. In JCI, we had 2 different trades as well, but this time 2 different losers, where both our aggressive and conservative box breaches ended up going outside of the clouds. So hopefully this helps to give you an idea of the volatility to expect. It's not always perfect, but there's a very simple process that you can follow where you can come to Forex Factory, find a list of all of the different markets, the different sectors, the different places where you might find volatility today, and then move on to the specific ETFs, breaking that open, related stocks, top holdings, things of that sort to then take advantage of this volatility. All right, I hope this video was helpful. Take care, everyone. Good luck trading, and we'll see you in the next update.